welcome to our new office here at the Mosaic in Chatham Park in Pittsboro, North Carolina. We are really excited to do our first video interview here in our new office location. So if you're around, come see us. I'm Chet Mann with CMG Financial and Team Chet Mortgage, and I'm with my team loan partner, Amanda Stevens, and we're glad to be talking with you today about something that's really important in the marketplace, and that is the difference between the different levels of approval that can set apart and differentiate our offers. Amanda, we see it every day. People wait till the last minute. They want to make an offer on a house, and they're truly not prepared in this market because so many multiple offer situations are present and people just can't win an offer. Tell us a little bit about the difference in your mind between maybe a pre-qualification, a pre-approval, and then a loan commitment.
Sure. Well, the easiest one to get out there is your pre-qualification. What that means is you've applied online, you've given your information, and it's kind of like the tech word out there, garbage in, garbage out. It's only as good as the information put in there. So I could put in there I make $30,000 a month, which that'd be amazing. But if I don't, and I don't have the documents verified to make that, then they're just going to go off of what you actually have keyed in there. So most of the time the information's accurate, but what the next level up for a pre-approval is we actually will look at your bank statements, your pay stubs, and your tax returns to verify if you make the $15,000 a month or $30,000 a month or $5,000 a month, or if you have the actual funds in your checking account, and then that's a pre-approval. So it's one step stronger than a pre-qualification of just the information supplied by your applicant. The third level we have, which is an awesome tool to use in this market, especially like you said, some houses get listed at 2 o'clock on a Friday and they're under contract by 6. So
Right.
it's good to have it in your back pocket instead of waiting till you see your dream house come live. So the third one's your loan commitment. What that means is we've already gotten your application, we've collected your documents, and we've sent it to an underwriter to review and verify those documents. And what that means is that all they're gonna wait for when you go under contract is to get an appraisal and your title work. And as long as those things come in clean, you're good to go. We have everything else. We've already underwritten your credit worthiness. And so it's a very solid top level when you're making offers for list agents to look at.
And then you did a really good job in breaking those down, because I think some people just think of pre-qualification is all they need. And in slower markets, that's probably okay. But when you've got 4 and 5 people behind you ready to make an offer, that loan commitment, what we call a to be determined underwrite, really can trump even a cash offer. Maybe not a cash offer all the time, but it can trump other offers for sure, because what we're saying to the seller and the seller's agent is basically this customer has already gone through the underwriting process. I mean, they're almost assured of closing. And what do you know about the other offers? Not very much. But if the other offer is pre-approved and you're only pre-qualified, in this market, in North Carolina especially, the seller is going to pick someone else. And so we've had a lot of disappointed customers at times who have waited too long to start the process.
Sure.
And then, we're going to ask you for what kind of documents in order to get that loan approval. What can they expect?
Okay, so some of the documents is, I'm going to ask for, depending on the loan, your most recent 30 days pay stubs, LES if you're VA. We're going to ask for your 2 years W-2s. If you're self-employed, we need those 2 years tax returns. And then, like I said, most recent 2 months bank statements. And that's really going to get us in the door unless there's just different things that come across in your application. I do want to touch back though, 2 things with doing that loan commitment that can help you and also help you not lose money is, one is your timeline. If you're already pre-approved, all we have to do is get that title work and appraisal. I mean, not pre-approved, you have your loan commitment through underwriting. You could go in and offer a 21-day closing.
That is a great point. And that is something at CMG, we've always been able to close our loans in less than 30 days. But to Amanda's point, what she's saying is if you've already taken the steps to get loan approved, that TBD underwrite, then really we're only waiting for a title work and appraisal to come in. We could literally close in 14 days.
And even on a conventional one, you could do a rush if you're willing to pay the additional possibly $150, $200 for that appraisal. And, if you want to close sooner than that, that's something we could get a quote back from the appraiser.
That's great points.
The second one on that, is that in this market, you don't see the $500 or $1,000 due diligence. So if you're going to go out there and say, I'm doing $8,000 due diligence, and we've seen a lot more too. If you already know you're underwritten and you're concerned, though maybe you are self-employed, or can they use this type of income? I'm not quite sure where my debt to income ratio is. This will help you secure that you're not going to lose out on those funds.
you almost can't afford not to get the loan commitment up front from us, which just means get us your documents early before you go under contract or even before you make the offer, and everyone will be a lot safer. And then once we have all that in place, we have realtors, if you're watching customers, we have ways and tools here to help your offer differentiate even more than the other 3 or 4 offers that might be coming in. So, and we'll save some of those tips and tricks for another video. But if you're out there and you have questions, I hope that from this interview today with Amanda, you've learned what the differences are between pre-qual, pre-approval, and a loan commitment. And let us help you win the offer and save your due diligence and be a happy homeowner in this hot market. It can be done. We're still doing lots of deals here and helping realtors win and helping their customers win, but we've got to be smart about it. And I thought that's what we wanted to talk about today.
Awesome.
We're excited to help anyone that needs us. Give us a call. We're sitting here in the middle of Chatham Park at the Mosaic in what's going to be the largest planned urban development on the East Coast, if not in the United States, at its finished. Come see us, give us a call if you want to know more about Chatham Park or Pittsboro or the surrounding area. We'd be glad to help. Until next time, I'm Chet Mann, and you are?
Amanda Stevens.
And we're with Team Chet Mortgage at CMG Financial. We'll talk to you soon. Thank you.